Hello traders, welcome back to another new YouTube video. So in this episode I'm going to be reviewing the simplest, easiest forex strategy that anyone can apply to their trading system and become profitable. So without further ado, make sure to subscribe to this channel, give it a like, comment, and let's get started with this video. So when we are starting up as traders, we tend to look for multiple strategies. We tend to try out very many strategies, indicators to try and make money in the forex market, and most of the cases we fail. So 90% of retail traders fail in the market just because they don't have the right tools and the right knowledge to trade in the market. So in this episode today, guys, I'm going to be showing you a very simple way we can trade patterns. So guys, my strategy today relies around patterns. This is a strategy that has made me profitable. Ever since I started trading patterns, I've just been profitable, guys, because patterns, whenever I see pattern on the chart, I just take the trade. So today I'm going to be reviewing how we can trade patterns. And yes, patterns happen every time on the chart as long as you analyze a few pairs, and you can only analyze those. So today we're going to analyze the Euro USD. So I trade the Euro USD because it's the most traded currency pair in the world, and it has perfect structures. There are times where you see these perfect structures. So guys, I'm going to be showing you how we can find these types of patterns and how we trade them and all that. So let's get started. So this is Euro USD. So whenever we're analyzing the forex market, we have to do a top-down analysis. Top-down analysis is where we look at all these time frames, starting from the weekly time frame where we see the picture, what is the market really doing. Then we look at the daily time frame where we see the trend, and then we look at the 4-hour time frame where we see the pattern. So we tend to want to identify patterns on the 4-hour time frames, because the bigger the time frame, so if you find the pattern on the bigger time frame, the more pips and money that you'll get from the market. So we're going to identify patterns. So guys, patterns are either we have continuational patterns, we have reversal patterns, and neutral patterns that show market will go either up or down. So knowing these patterns on your fingertips, it will make you it will set you aside from other retail traders that trade anyhowly without a system. So when you add the trading patterns into your system, this is going to make you so profitable, guys. So as you can see, this is our Euro USD. So as I've told you, I'm going to be analyzing the 4-hour time frame and 1-hour time frame to identify my patterns. So let's jump onto the 1-hour time frame. So right now, as you know, this is a Sunday. Market right now has closed. So right now we're going to do a back testing. We're going to back test, guys. So this is my 4-hour time frame. So this is where the current market is, as you can see. Even without just using your eyes, some little bit of price action, you can definitely see prices formed two double bottoms. As you know, whenever you have a double bottom, you know what we have. The double bottom, this is a reversal pattern to the upper side, so meaning this market is going to go up. So this is a pattern, guys, you see. So right now today is a Sunday. Today is a Sunday, it's midnight right here in Kampala. So everyone that I think who's monitoring the Euro USD, they can see this double bottom. This is the double bottom we have. So meaning if someone is to take trade there, they would just draw out this line here. So that line represents the neckline. This represents the neckline, that line here. So what we want now is the price to just bounce off there. What we want is just price to bounce off like this, one price to break, retest, and then go up to the upper side. This is what we want for this currency. But again, we can identify another pattern in here. So to be able to identify another pattern, what I'm going to do is come to the 1-hour time frame like this. So when I come to the 1-hour time frame, the pattern, one of the pattern that shows reversal is called the falling wedge. So we're going to draw out a falling wedge. We're going to draw out a falling wedge, guys. So when you're drawing a falling wedge, all you want to do is come here, grab a trend line. We grab a trend line like this. So I've connected this zone here to this zone here. Then I'm also choose another trend line like this. Mark out this. I'll mark out this, as you can see, guys. So right now this is my falling wedge, as you can see. So a falling wedge is a reversal pattern to the upper side. A falling wedge is a reversal pattern to the upper side, as you can see. So a falling wedge. So whenever we're taking a trade on a falling wedge, all we want to do is wait for a breakout and retest, then we take the trade. So meaning we have to wait for the breakout here. The breakout has already happened, as you can see here. The breakout has already happened, as you can see. So right now we just wait for the retest and then we take that trade. So here we're going to buy. And another confirmation that this is a falling wedge, I mean this is a reversal pattern. When we add our indicator, which is called the RSI, when you add the relative strength index, you're going to see that we have divergence. So what is divergence? Divergence is when we have price, this is when we have price, you know, coming down on our chart like this, and then on our price coming down like this, then we have on our indicator price coming up like this. So when I draw my divergence, so this is divergence right here, and it has to be in the same zone as the what, as your price up there. So let me mark this out very well for you guys so that you can see. So this is divergence. So this is divergence right here. As you can see, guys, this here is divergence. You see, this here is divergence. You can see here we have price coming down. We have price here coming down like this, and then you have price coming up like this. So this is divergence. So meaning this is a sign for reversal. Another thing you can see here, you can see that this was on the divergence, this was a lower low, and then now we have market trying to form higher lows. So meaning price is going to reverse anytime soon. Price is going to reverse anytime soon. So this is one of the patterns that I'm able to identify, and then I'll take trade definitely. Because that is like 100%. You don't need to make multiple analysis. You don't need to complicate things, guys. Whenever you see such a pattern, a falling wedge, look out for divergence, look out for reversal signs, and then, you know, take trade. So right now what we shall do, wait for the breakout at the neckline, breakout retest, and then we take the trade. So we are going to continue. We are going to look for another pattern. We are going to look for another pattern still on the Euro USD. These are some of the patterns I traded back then. So let's jump onto the 4-hour time frame. Let's go to the 4-hour time frame. So we have another pattern on the 4-hour time frame. We have another pattern on the 4-hour time frame. We have another pattern on the 4-hour time frame. So when I zoom in like this, actually let me jump onto the daily time frame. So this is where this pattern, it came out very nicely. So most of you guys ignore these patterns, but again, from now on, please don't ignore these patterns. These are patterns that will make you profitable, definitely make you profitable. So right now we have this there is a pattern we call a cup and handle. A cup and handle. So this is a pattern that formed last week when the euros went down crazy. So this is the cup and handle, as you can see. This is the cup and handle. So then this is our cup here, you see. This is how our cup looks like. A cup and handle is a continuational pattern to the downside, as you can see. This is our cup, this one. Then our handle is this one, you see. So this is our handle and then cup. So whenever you see a pattern like this, definitely know market is going to continue to go down, you know. So when I saw this pattern, I knew price was going to push down even more, because this is the same time when euros were like going down crazy, you know. So a cup and handle, as I've told you guys, it's a continuational pattern to the downside. Actually, this is an inverse cup and handle. So whenever you see an inverse cup and handle, take the trade after the price breaks out. So what you want to do is just draw out a neckline like this, you know, draw out the neckline. So when you draw out the neckline, go into the smaller time frames and look for the entry. But again, how do you measure your target? You just measure the distance between here up here. You see, you measure the cup from here to where the neckline comes down to, like this, you see. So the distance, this distance between here and here is the same distance when this cup breaks. This is the same distance this market is going to form from here to down here. This is the same distance, guys. So I took this trade and I was so happy, because a cup and handle is not a pattern that you see every time on the market. But again, when you see it, know that, okay, things are going to be messy for that currency pair. It means things are messy, as you even saw the Euro USD. I mean the euros dipping. So you see, right now we have here 413 pips, as you can see. So if something we measure, let's measure from here. Let's measure from here, and then we see from here to where price came down to. Let's see. First zoom in very well like this so that you can see. So let's measure from here price broke from here, guys. You can see this is the same. You can see 411 pips. I told you guys, whenever these patterns break out, they have to form at least the same. So this is the distance in between here from here. So this is another pattern, guys. This is a cup and handle. So this is a cup, this is a cup and handle pattern. So this is our second pattern, you see. So if you don't need to be in the markets every time, guys, you don't need to be in the markets every time, you know, analyzing and all that. So again, even inside this, before the cup had formed, we had more patterns. So we're going to jump onto the 4-hour time frames and identify those patterns. We had so let's jump onto here. So let's zoom into this side. So the first thing, as you can see, we had an inverse. We had what we call triple. We had a triple top. So this is a triple top right here. You can see, guys. No, this is not a triple top, but again, this was like a sideways market. This was like a sideways market. So this is a sideways market, as you can see. So a sideways market is a market that is ranging in between a fixed range. As you can see, this one, price was jumping in between here like this. Again, what do you wait for? You just wait for the breakout. And as you can see, price broke out here at this zone here. You see, price broke out at this zone here, and then it retested that same zone. We had the breakout, retest. As you can see, price broke out at this zone here, retested the zone, and then price went down. You see, price went down. So this is very easy, guys. You see, price broke out, retested, and then price went down. Again, you measure this distance in between here and here to see. You see, this is 111 pips. So this is your first take profit you measure from when price breaks out from here to any part down there, and then your stop loss has to be very tight, since these are patterns. Actually, you have to have a stop loss in your trading system that, you know, when you ever lose that money, you're fine with losing that money. But again, we don't want to lose any money. That's why we have to have proper knowledge on these forex markets. So again, this is another pattern, guys, that we identified. So we keep on going inside. Everywhere we look, we have patterns, guys. Everywhere we look, we have multiple patterns. So let's jump onto another pair. Let's look at the USD CHF. We're going to look at the USD CHF. This is another great currency that I trade, USD CHF. Again, we're just going to look for patterns only. We're only looking for patterns. Forex is very easy, guys. It's very easy as long as you have a system and you have a trading plan that you follow. So when I jump onto my patterns, as you can see, what is the first thing that I see? I see market forming a double top. A double top. What does double top mean? A double top means that it means this is a reversal pattern to the downside. It's a reversal pattern to the downside. So meaning price is going to reverse and go down. And again, we have this here. So at this level, this is where we draw our neckline like this. This is how we draw our neckline like this. You see, that's why we draw a neckline. So meaning we're waiting for the breakout, and the breakout, as you can see, it was happening right here. Then we just wait for the breakout, retest, and then we shall see price coming down here. So price will come down to this. So we measure, if we were to measure our target, we shall measure from this distance here. So this is almost 80 pips. Almost 80 pips. So meaning if you have to measure your target, it has to be 80 pips from here to let's see, 80 pips around here. So this would be your target. This would be your target right here. And then you just, you know, risk 20-30 pips somewhere like there. Somewhere like that. So this would be a 1 to 2 risk to reward ratio. So this is a double top, guys. As you can see, this is our double top. Again, we would identify even divergence when you add our RSI, because here we see price because here we see price, you know, giving us this this, you see this, we have price, you know, giving us this. You see price is like coming up, you see. So when we add our RSI, we shall definitely see divergence. So this is our first pattern on the USD CHF. Again, you just, you know, zoom in. Now look at this, guys. So what do we have when I zoom out like this? Now this is a bigger, you know, these are bigger structures. So again, we have a double top, you see. Again, we have a double bottom, you see. Price was here, price came back here, you see. And what did price do? Price just bounced off here and went back up. So meaning someone would find their entries in there and then take trade. Again, as you're analyzing these patterns, you have to take notice of the fundamental analysis, because most of the fundamental analysis is what makes these prices to go up like that. So again, you see we had a very nice upper move to the upper side, but off, you see this, we had price coming down to this zone here. Again, price goes to this zone here, up here, you see, it comes back to this zone here. You see what we have? Price comes back to this zone again, you see, it comes back to this zone, and then price is headed back there. But again, we shall just see a down move like this, then again we shall see price going back to the upper side there. But again, we're just identifying patterns. We just want to identify patterns. So let's now jump onto the smaller time frame. I'm going to be showing you how we find these patterns on every 4 hour time frame, 1 hour time frame. So when you jump onto the 1 hour time frame, what are we looking for? We are looking for the patterns. So what we do, we are going to let's scroll to this side. What do we have? Let's look for a pattern, guys. Let's see if there is a pattern. Everywhere I look the pattern, guys. There are even these smaller time frames, like the 15-minute time frame, where you'd find a pattern and then take trade. Again, we have a sideways market here. This is a sideways market, as you can see. Price ranging in a fixed zone, as you can see. This is a fixed zone right here. This is a fixed zone, as you see. Whenever we have price ranging in a fixed zone, we need to, there is always a breakout. As you can see, price was ranging in between this fixed zone, as you can see. So the breakout happened here. The breakout was just here, as you can see. But even before the breakout, we had a nice bullish flag. A bullish flag is a continuation pattern to the upper side. As you can see, this is our bullish flag. You see, this is our bullish flag, guys. This is our bullish flag, as you can see. This is a bullish flag. So after the bullish flag broke out, we'd just take trade. But again, most people wait for the breakout. As you can see, this is our bullish flag right here. Most people would take trade after just the breakout. But again, me, when I look at the bullish flag, I know, okay, this pattern shows continuation to the upper side. Again, how do I measure my take profit? I just measure the distance between this sideways market from here to up here. So this is 80 pips. So again, meaning I will just measure out 80 pips from just here to up there, where 80 pips will end. 80 pips, as you can see, that's 80 pips right there. Then my stop loss would be definitely 30 pips or 20 pips. That would be my stop loss. So this is another pattern. This is another great pattern, a bullish flag. You see, we had the sideways market, and then what made the market break out from the sideways market? We had a bullish flag, guys. We had a bullish flag. Again, we keep on going. Let's keep on looking for these great setups. Everywhere we have setups, guys. Everywhere we have setups. Again, we have another setup here, right here. You can see wherever we go, there are setups. So this is called a bearish flag. As you can see, this is a bearish flag right here. This is a bearish flag. You can see a bearish flag is a reversal pattern to the downside. I mean, it's a continuation pattern to the downside. Whenever you see a flag like this, market is going to continue and go down. As you can see, that's what we had, as you can see right there. So let's jump onto another. Let's jump onto another currency pair. So right now we're going to be looking at the US oil. So this is an indices. This is an indices, US oil. As you can see. So what do you have on the US oil? Again, just tap in like this, you see patterns everywhere. Patterns everywhere. As you can see, this is a pattern right here. See, a falling wedge. We have a falling wedge right there. Price breaks out, breaks out, just goes up. So again, you measure target from here to here. This is the same target from here to up here. You see, that is another great. You see, again, what do you have up here? We have another pattern. Look, guys, everywhere we go, we have patterns. See, pattern up here. Everywhere we go, we have patterns. You see, price, you see, is ranging in between up here. Again, here, this is like it's like we had like a heads and shoulders. This is a shoulder, this is a head. As you can see, they're not on the same straight line, they're not on the same line, and then you have a shoulder. You see, so this one is low, then this one is higher, then meaning this is low. So this is a reversal pattern to the downside. That's why even you saw price coming down like this. Crazy. That's another that is another great pattern, which is called an inverse. No, this is a head and shoulder pattern. So guys, wherever you go, you are going to find patterns. Wherever you go, you're going to find patterns. It's just a matter of you being able to identify them. Again, look at this pattern right here. Some patterns don't have names, as long as you can just draw out a structure, guys. Some patterns don't have names, as you can see. Look at this other great structure right here. You see this? Wherever you go, you are going to find patterns. Look at this, guys. Wherever you go, you're going to find patterns. Everywhere there are patterns. It's just a matter of us identifying these patterns, and then we have to be able to look for these patterns every time on the market. So what do we have on here? We have price, breaking out, retesting, as you can see. We have breakout, retest, and then price went back up. You see? You can even see. You see? We have a breakout like this, retest with a red candle, a big red candle. Then you had this big candle come in. Market went up crazy. You see? Everywhere, guys, we are going to have patterns everywhere. So this is US oil. This is US oil. Even when you go into the gold, you are going to find patterns there, guys. You're going to find patterns on even the gold pair. So this is the gold pair, as you can see. So this is the bigger time frame. So let's jump onto the 4-hour time frame for gold. As I told you guys, we look for patterns on bigger time frames, not small time frames really, just bigger time frames. Wherever we go, we find patterns. Actually, let's start with the daily time frame for the gold here. You see, but patterns happen everywhere. Everywhere I look, we have patterns. Everywhere. So guys, this is the first pattern right here. As you can see, we had price, see, we had that, and then we had this, see. So as you can see, we had the breakout. You see, everywhere, guys, you look, we have patterns everywhere. As you can see, everywhere. I can draw out patterns the whole day for you guys, the whole day, because patterns are very easy to trade. All you want to do is wait for the breakout, retest, and then take trade. If you can't find the retest on the bigger time frame, go into the smaller time frames and find entries there. You see, go into the smaller time frames and find entries there. Wherever we go, we find patterns. See, wherever we go, we find patterns. If you're able to find patterns, this will, whenever you are just looking for patterns, this becomes very easy for you to trade. You're not going to be on the markets every time. You have to be there, look for charts, and then what to trade. Because you're just looking out for patterns. You don't need to be in the markets every time. You can analyze the markets every time, but you don't need to place trades every time. Because if you don't see a pattern, why are you in the market? If you are someone who trades patterns only, why are you in the market? You can even see here we have something else here. See, we had the breakout from here up here, from down here, and then we had price go down. Pattern. You see, price comes back in the same zone again, bounces off, go down. You see. Again, I'll go back to the most traded currency pair, the Euro USD. Let's go back to the Euro USD. We're back to the Euro USD because it's the most traded, and this is where I can find the most patterns. This is where I can find the most patterns. So this is my Euro USD, guys. This is my Euro USD. Wherever I look, I can find patterns. Wherever I look, I can find patterns. You see, these are all patterns. These are all patterns right here. And this is a daily time frame. So guys, I'm going to be reviewing more and more simple strategies that you guys can use to analyze the forex market. But again, this is the greatest strategy that you can apply to your trading system and become profitable by trading patterns, because patterns are very easy. If you haven't watched my video about the 10 patterns, the most strong patterns you have in the forex market, tap the link above there. You can go watch the video right now, guys. So make sure to subscribe to this channel and turn the notification bell so you don't miss out on our weekly videos we post, guys. Have a safe day, guys. See you.